Hi guys. In this video we will deeply talk about engulfing patterns, how to find them in the chart, how to use them for your analysis, and how to use them to find a trade entry. So let's start right away and make sure you stay tuned till the end. This video will help you to understand the patterns deeply and how to use them for your trading. So first let's have a look on this chart and you will see how easily you can find the patterns in this chart if you use TradingView. On the upside there's a button called Indicators, and there you can find candlestick patterns, and then you can say, okay, show me engulfing bearish pattern or engulfing bullish pattern. We will check both for now and have a look. And as you see, there are lots of bullish and bearish engulfing patterns in this chart. But what you also see, since we already know that engulfing patterns are trend reversal patterns. So the bullish ones occurring in a downtrend are telling you, okay, be cautious, this is a possible reversal to a long trend. And the bearish ones, on the other hand, tell you in an uptrend, okay, be cautious, there's a pattern that tells you now that there's a possible trend reversal. But as you see, there's also in the ongoing trend patterns. Here we have a bullish engulfing pattern, a red candle, followed by a green candle that engulfs the whole body of the red candle. And it's in the ongoing downtrend, but it's in the low of the swing. So in this case, it counts only for a few candles. And this one is also a bullish engulfing pattern, but this example shows you that not every pattern is followed by a reversal. That's why it's so important to do more analysis than just spotting and identifying the patterns. That's why I always point out, please make sure that you don't use a single pattern as a whole strategy. Therefore, we will look how to use patterns in a strategy. Let's take a look. We have a clear downtrend here, and the market is making lower lows and lower highs. And as you see, we have 1, 2, 3, 4, 5 swings in this downtrend already. This is telling us, if you have watched my trendline video, that this is the average number of swings of a clear trend. So after 5 swings, you should be really cautious in opening a position in trend direction. It doesn't mean that the trend can't have more than 5 or less than 5 swings, but this is just the average number of swings that in history a trend has lasted. So it's just telling us at this point it is more likely that a trend reversal is going to take place. So this is one indication for us that this could be a possible trend reversal. So let's look for more factors than this. We also have a strong downwards movement here, and here is occurring a long downwards wick. This is telling us that there was a strong impulse down, but then the bears couldn't hold it because the bulls were pushing it back up. So it signals weakness in the market. We had weakness here before as well with this long wick, and then the bulls were able to take over again. You see the strong downwards impulse. In this case it didn't work out, but here it's occurring again and makes us a second condition which shows us weakness at this point. Now let's do some analysis in the higher time frame. Let's switch to the 4-hour chart. Let's identify support and resistance levels over here. And as you see, we have a support and resistance area right over here. If we scroll in to our position where we were wanting to look for a trade, this is right the position where we were analyzing right now. So it's also confirming that this is a possible reversal zone for us. Now we switch back to our 1 hour. So we have our third condition. This is telling us that there's weakness in the market. It could be a possible reversal. 3 arguments meeting at this point is a good precondition for a possible trade entry. But we don't enter blindly just because of these conditions. We identified our area now where we want to look deeply for a trade entry. So now let's have a closer look right in this area. We see that the market is finding a bottom here and then starting to make higher highs and higher lows. That's an additional factor for us. And now we look how to find an entry in this area. And as you see right here, there is building a bullish engulfing pattern. We have a small red candle followed by a green one that fully engulfs the red first candle's body. And also we have a strong momentum in this green candle, since you see it not only engulfs the last red candle, it engulfs the last 1, 2, 3, 4, 5, 6 candles. This is a good factor or a good condition for us where we could place an order. We could place our order right here above the bullish engulfing pattern and put our stop loss down here below the support and resistance zone to leave room for the trade. And as you see, there are also 3 white soldiers following, so it's also an additional argument that our trade is probably gonna work out. But let's see how it would have worked. We could place our target right below the last big resistance, and let's see how it would have worked. And you see the market came in a clear, beautiful uptrend, and it has reached the last resistance and then bounced back. So this is how you should use patterns for your trading. Not as a whole strategy, just as additional factor to find an entry in areas where you have analyzed before, where there's a high probability for a reversal. So if you enjoyed this content, please leave me a thumb up and leave me a comment. And don't forget to subscribe to my channel for more interesting videos to come up soon. See you there!